GKFX presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar where we're just going to run through the price action from the charts of some of the major currencies and commodities and the stock market for this week. Thank you very much for joining. If you do enjoy these videos and you want to make sure you get to them every week, please click that subscribe button, click the like button if you get some benefit, and other people will be able to see it too. So let's start with the euro-dollar currency pair. Now this is how we find ourselves on the 4-hour price chart. It's basically this area that I'm concentrating in, and as you can see, last time we had a false breakout through this area to the top side, we followed down, we had a false breakout through this support, we followed up again, and we've had another false breakout through the top side. So there's obviously a reoccurring theme here that we're in a sideways trading range and we're attempting breakouts from either side of the range, but it's just not quite happening, and for the time being we're trendless. You can see the moving average through the price action here is going, above and the price is going above and below the moving average, and this is an environment from this 4-hour time frame perspective at least, which I find gives us a good kind of view for the rest of the week, is directionless, and so we really do need a breakout through the top of the range, which is currently capped by 110, the round number, or the bottom of the range, which for my money is around 107.80. So that is when we can start employing trending categories. What's encouraging to me at the moment, at least on this 4-hourly basis, is that we haven't come down into oversold territory during the sell-off, but we have tipped into overbought territory during the rally. So that would imply some marginal strength, and so to me implies a bit more likelihood that we actually eventually get a topside breakout here, but obviously it's not materialized as of yet. So I think all we can really do is look for trades at the top and the bottom of this range. And if you are trading shorter time frames than this, if you're down on the 5-15 minute chart and you're riding this current downtrend lower, just be mindful of the fact that it's pretty likely to come to a halt down at the bottom of this slightly longer term trading range down near 107.80. And if you do take some short trades in that area, be aware that obviously this range may cap those short trades, but if they work and we get a breakdown lower, then obviously you've got the power of the longer term downtrend backing up your short term short trades, which at the moment I would argue you wouldn't have. Of course, general catalysts for the forex market to look out for this week is that we do have non-farm payrolls on Friday. We've also got a couple of central bank meetings. We had the RBA already, and they kept rates on hold. We've also got the Bank of England this week, so that will be important for the pound, which I now have on the chart at the moment. And you can see similar story here, where we had a bigger uplift off the lows in the pound, but nonetheless, the recent rally in the pound, which picked up steam at the end of last week, has petered out because we basically perfectly tested that previous peak around 126, and we've turned to the downside. And slightly less constructive on the pound, but not such a big deal, is that we're seeing some slight bearish divergence here, where we've had two equal highs, but this high was slightly higher than this. It's not a big concern for me, and again we did make it into overbought territory, which is a sign of strength, but less so is that we also did make it into oversold territory on the last sell-off. So very much range bound at the moment in the pound, and given that we find ourselves mid-range, I'm still biased towards a general upside breakout, given the kind of general trend of how we've been moving in this correction, assuming the correction pushes higher, but very much looking out for for just our main range support here. 2250, that's our main indication that actually the price has rolled over and we start looking for trending short trades. If we do take out the current area of support that we're challenging, oh, it's locked onto the price. Let me put that through there, and then maybe if I zoom in a bit, you can see the price action a bit more clearly. This is clearly our current support. We've run into those old highs, we've tipped straight over into the support, and we've had a little rebound. If we break down through this support, it's a clue that we're heading down to the bottom of the kind of main range. But aside from that, these are the kind of main levels that I'm watching. Obviously, of course, if we basically hold what is essentially the 124 level in this vicinity, on this, which we've rallied up, we've pulled back, not had to go all the way down, and we're rallying up again. And then of course if we get through 125, that will be constructive, and it will suggest we're going up to test the highs again, and it would actually imply that we're having only tested the middle of the range, not the bottom, before testing the top of the range again. It would suggest that we're on the route to the upside breakout. So watch out for the fact that we've held 124 as support. If we then make it through the next round number of resistance at 125, that's a sign that the upward momentum is picking up in the market. Now let's have a look at the dollar yen. So obviously a downward bias to this chart. Again, it's our 4-hour candlestick chart. We're below our moving average here, but it's kind of rangy, and we're looking for the possibility that we've bottomed here. We mentioned the downside break last week. I think we were probably coming in to the 107 level and expecting a possible downside break. We got it, but we didn't move too far, and we're range bound. We actually found that previous support and resistance again with a false breakout, and we've just tipped over to that same low again. So gone a bit range bound on dollar yen, but I think until we get some kind of decisive move through this peak up here and above our moving average, still it feels like we're range bound and no decisive up break. But I'd say the possibility of that upside break is improved, just given the fact that we didn't get much follow through. And if I remind you by zooming out a little bit, this was some decent support that we had through here. We broke it. If bears were really determined, you'd look for them to take the price right down to 105, and that was something we were eyeing. But you can see we pushed straight above that form of support, and we're just range bound again. So some indication that actually dollar yen has had a false breakout to the downside and may be looking for that upside break. And you could even argue that there's a modest inkling of, you see how we've made a lower low in the price, but we've made actually a marginally higher low in RSI. So actually a little bit of bullish divergence, helping our cause to suggest that maybe we get an upside break here in the dollar yen. Right, onto that Aussie, and we mentioned that we had the RBA meeting this week, although I would argue that's probably not the overriding cause here. We've been highlighting this level for a while, which was this downside spike. That perfectly was the resistance in the end. So it was good that we had it in our chart, and we rolled over from there quite substantially. And it looks like it's a false break through 65 to that big long-standing resistance. We tanked off pretty severely from there, and then we've pulled back to the former resistance and turned support, and it looks like it's offering resistance again. So had the first move lower, we're testing it again, but if this level holds, it would suggest to me that we take out this low and we move down towards these prior lows down here, and this downside in the Aussie continues. But even if we do eventually see some downside, potentially all the way back down to these kind of 062, 060 areas, and we unwind a lot of this Aussie strength, we could still get a closer test of the between the 65 and our long-term resistance. So look out for, if this area doesn't hold where we currently are, and it looks like we might not, just look for somewhere, basically this zone, somewhere between 65 and that resistance, as potentially somewhere the price rolls over for us then to get the bigger drop. Why do I think the bigger drop's in? Well, I mean, there is that just strong area of resistance after a big rally in the Aussie, and of course there are many arguments to be made for Australia doing well relative to other countries in the lockdown, and that certainly could be the reason to see an upside break of that resistance. We've got to be mindful of it, but we are hearing a bit more rhetoric about the US-China trade war, and generally Australia gets caught in the middle of that, and so that would be just a negative force on the Aussie, and it has been so far. Doesn't mean it has to stay that way, but if we do get another little pickup in the Aussie, that overriding fear about the trade war combined with that big resistance level might be what turn things down again. Over to the CAD. Well, we've held on to the lows pretty well there, been range bound in the CAD for longer than those other currency pairs. We've just slammed into that 30 level several times on the RSI, and likewise 70 on the top side with resistance 3 times. Very much characteristic of a range bound market. You get these interim trends in the time being, and I think maybe what looks alright at the moment is that we have held that low. It's above our kind of long-term breakout area here, and that's what we've been saying all along, is that we kind of generally stay positive on dollar CAD while we're above 137. Well, we're still easily above it. We've had a couple of rallies off these lows. Obviously we just dropped off that long-term resistance in the first place. Maybe we've had enough of a corrective pattern now. We've held above the 137. Maybe now it's some time to resume a bit of this upside tract. That's my bias at least, and we've got a little bit of confirmation from it at the moment. We've rallied nicely off the lows, took out the prior high, and just getting a bit of a pullback now. And so 140, the big round number, really the level that we want to hold on to on a short-term basis, to suggest that maybe a bottoming's in here, and then we put in a higher low and push on up to 143, and those prior peaks up there, and if beyond there, our target being 145 and these big levels up here. So to surmise in dollar CAD, just looks like a basing pattern happening. Some good recent momentum off the lows. We've had a pullback. That's what we want after a big surge. We'll wait for the pullback, get in at better prices. We're seeing that pullback at the moment. Of course, we can always go back to the lows, but that surge off the long-term support, in combination with just viewing this as a overall consolidation from a big rally, would put all that together, and it seems like decent odds that we can push again to the top side. So now we're looking at gold, and another pretty neat consolidation happening in here. Obviously the rally off the long-term support here, which again is kind of a level we've been watching, is around 1450. Obviously well above there at the moment. 1650 was the next level where we found resistance, found support, rallied up, and we've been consolidating since then. And this is our price zone, and likewise we're in the middle of the zone. Don't really want to be doing too much in the middle of the zone unless trading on a very short-term basis. And just when you are trading on that short-term basis, just keep in mind the edges of the zone that may cap. If you're buying up to the top, just be aware of the top. If you're selling into the bottom, just be aware of the bottom if you're doing that short-term trading. On this 4-hour level, I would say we're in perfectly the wrong place. 1700 is obviously the round number. It's the middle of this range. what we want to obviously aim for is either buying from the lows, selling from the highs, or looking for that breakout, or a combination of all above. Is there a way to have a bias which way this breakout eventually goes? Well, to me it seems like a bullish market. The only slight worry I have is that we run out of steam a little bit. Not if I put up to the daily chart, we've had a great rally in gold. We had a huge pullback from 1700, showed good strength to get back beyond it, and we did so very quickly. So it's perhaps unreasonable to expect that we can really get well beyond the previous high, but that's the only concern, is that we've just not made it much beyond the previous peak, and we're consolidating, and it risks a bigger slump and more of a range trading scenario. But as I say, even if we do take out this low, present some good opportunity to trade down to these lows and then eventually these big lows. But I think while above that 1450, we're still overall constructive on gold. And for the short term, for this trading range, expecting a topside breakout, but obviously aware of the fact that if we do get the bottom side one, still some good price action to be had, trading that correction to the downside, with first level coming in at 1640, and then just this prior peak in at 1570, prior base down at 1570. Now onto the oil market. Now that's obviously been interesting. We had some huge volatility, from having been down sub 10 on our spot prices. We're now up pushing into 25, so it's been a great market for oil, obviously. And you can see this was the rally off the low, and at this point it was pretty tenuous being a buyer, and we got the pullback, but then we started to get that consolidation before the previous low, consolidate, and then we got that breakout, retest, and push higher. And from here on in, it's been pretty textbook. We had a break, a consolidation below the previous peak, then the break, and then we've been consolidating above that peak there, with this longer term level. If I go to the daily chart, that's probably a bit excessive, 4 hour. That long term level is kind of the middle of the range. That long term level being the middle of the range, and now we've broken out to the top side, and we're looking at 25 as the big round number, and then from our 4 hour chart we can see that these old highs are in here at 30 as potential levels to target should we get through 25. What's the overall structure here? Well, of course, on even the 4 hour chart, and even if you zoom in a bit, structure's still kind of bearish. Just from maybe more recently, you're talking about a kind of daily price action. It's very much a bearish market, but obviously some signs of strength off the lows, which is something we were talking about in last week's webinar as well. And the fact that we've just got above this 20 level, extra confirmation of that fact. A date to keep in mind for the oil market is around the 20th, 21st, I forget the exact date, but I think it's the 21st, is when the front month futures contract expires in oil, in WTI, and that is probably in the week lead up to that, so we're about 2 weeks away from it now, just over. In a few days before that expiry, that's when we potentially experience a bit more weakness in oil, depending on what the capacity for storage is like in the United States. And last but not least, here is the stock market. It's the S&P 500. And we've been generally positive on this for the last few webinars, and we've got one of the biggest pullbacks we've had in a while at the end of last week, but you can see that we've basically held on to this daily 20 period moving average, which is this blue line through here, and we're pushing up to this kind of key resistance area, which we've had a bit of a false break above and pulled below, but I think this is still kind of consistent of an uptrend that we're in at the moment. And to boot, another little signal that potentially we're still positive on the market is we've had some is not looking at RSI from a different perspective, not from a divergence perspective, but looking at it from a reversal perspective. And what we're looking at here is a positive reversal in RSI, whereby we've seen a lower low in momentum, but we've seen a higher high in price. So it's almost like price is acting strongly even though the momentum has been weak, and that's sort of considered a kind of bullish signal for the market, something to bear in mind. So we've held on to the moving averages, we've held on to the prior lows in this range that we even had in place for the previous webinar around at 2760. Held 2760, held the 20-day moving average, got a positive reversal on RSI. So a little bit of overhead resistance here from 2890 up into 2900. So we need to surpass this overhead resistance first, but in an uptrend you would expect to do so. You'd expect to keep taking out those overhead resistances and keep holding the underneath supports. Okay, fantastic. Thank you very much for watching this webinar again, and great. Please do subscribe to the video, subscribe to the channel so that you don't miss next week's video. Thank you everyone, and good luck trading this week.